Hello everyone. Today we're going to be talking about investments. Which investment vehicle is best and might suit you? I'm going to be explaining to you what it looks like investing in the stocks and also real estate and businesses. With that, in case if you're new to this channel, I usually share information about entrepreneurship, investing, wellness, and happiness. If you'd like to follow us, make sure you subscribe and turn on the notification button so you get notified every time we upload a new videos. Thank you for coming. Let's get to it. Investment. What is an investment? Investment is a process of investing your money for profit, to generate profit. When you think about an investment, usually most people assume that is just investing on real estate or businesses. But when you invest any of your hard-earned money on anything to generate an income from it, or to multiply, to double your money, even generate a small profit, that is an investment. If you're thinking about an investing, I want you to remember two rules Warren Buffett has for years, and he always mentioned those rules over and over and over again. And if you pay attention and if you listen, his rules are very simple. So rule number one is do not lose money. That's simple as that. Rule number one is do not lose money. So when you invest, you need to really study hard and figure out your investment is going to be a good investment or not. So the ultimate goal is not losing money. Don't focus on just profiting, because sometimes focusing on profiting will cause you to lose a lot more because you didn't study what can make you lose the money. So focus on do not lose money. Rule number two of Warren Buffett, the famous investor for ages, who made billions on the stock market and also by buying and selling and holding companies. And we can learn a lot of things from him. His rule number two is remember rule number one. Simple as that. So he focuses on not losing money more than he focuses on his profit. So when you think about any investment, I want you to draw it up on a paper and see what can cause that company to fall, or what can cause your investment to go to zero or make you lose money. So focus on not to lose money more than how much money you're going to earn. So with that, let's get to what are the vehicles of an investment. I'm going to be talking about the 4 ways how you can invest money to generate more income. The number one and the famous one is the stock market. When we talk about stock market or equity, there is so many ways you can invest your money. Some of it is by investing on just regular company stocks, or whichever company you know of, you like, or you did a little bit of research and you buy the stock, you hold it, and as the company grows, your profit grows with it. Some companies will pay you dividend yearly or quarterly. Some companies don't pay you no dividend at all and will just generate a growth as the company grows. An example for that is some of the big companies. If you think of like Amazon, they have a big growth, so they've been just keep on growing, not paying dividend, but their stocks been really increasing on value, so you benefit from the growth side. But if you think about companies like Coca-Cola, they've been around for years. They've been paying dividend from their profit sharing every year, and their growth amount might not be huge, but they always have money paid to you as a dividend yearly. So that's one of an investment you can think of. The second option I have here is investing on real estate. Investing on real estate can be its own a big section where we're going to be discussing in the future. But when you invest on real estate, there's multiple different ways. You can buy a home. As you live in the house, the value of the neighborhood increases, or the value of the house will increase because you bought it right. Then when you sell it in the future, because you pay down your principal as you lived in that house, that is one way of investing. But that's not always profitable. So investing on the house, the return is low, but that's one. Another one is on rental properties. There is a commercial side of real estate and also residential of real estate, where you can have people living there as a tenant who lease those houses from you, and they pay you rent. You pay the mortgage with the rent, and that would be your investment. In the long run, you pay off the mortgage, and that is your profit. That's one way. As you rented it too, it might be bringing you some cash flow if you bought it right. Sometimes it might not bring you no cash flow because the rent and the mortgage can be very close, and sometimes it might end up costing you money out of pocket. But as you build equity on that mortgage, and when you sell the house, that's how you profit. The commercial side is a little bit different. Starting from the day you bought the commercial property, it can be profitable if you bought it properly, based on what kind of return that property might have. Or you might have bought a land knowing that the area might increase in value, and there might be demand in the future coming because you saw the growth of the population on that area. Sometimes you can do that and the profit can be good. But at the same time, the risks are higher as you're investing in real estate and also in stock market. If you don't take a big risk on the stock market and invest it in very low growth but very steady companies, usually the profit you're going to earn will be a little less, but at the same time your risk is less. Same thing in real estate. The profit, if you're making a little bit less and your risk is less, your profit you're going to make on that property will be less because the cost of that property will be a little bit higher than high risk areas, high risk property, but the future might be bigger. That's something you have to study as you're investing. But that's the second way of investing, is real estate. The third way is investing on companies. When you invest on companies, it can be on investing on a startup company from zero. They are building the companies. Then if the company becomes very successful and profitable, your investment will be generating you a lot more money. But if you invest on a company and it had a lot of hiccups and it failed and it bankrupted or they go out of business, then it will be a loss. So your risk can be higher, but the profit can be higher too. So when you think about investing on a startup or on a company, make sure you do your due diligence and study what you're investing on real well so you won't be risking your money. The fourth investment is investing on yourself. That's something usually doesn't talk about investment because we all focus on the money part. But I'm going to put this in on this group here because investing on yourself, you will invest some money to educate and also get more certification to yourself, so it will generate you more money because now you became certified or you have more education and you became an expert on a certain field. If you are getting paid at this much salary, now you added 2 more certifications, now you increase your pay to a higher level. If you always think about how you can invest yourself, pay for your education, buy more training for yourself so you get more certifications, or buy books or courses, whatever it is, your investment on increasing your value of who you are, that is also another way of investing your money to generate more income to yourself. So with this, all the investment strategy in the future, I'm going to get into a little bit more deep and how you can calculate your numbers. But till then, take care. This is Simon again. If you are not subscribed on my channel yet, make sure you do so. As always, give us a thumbs up. And if you have any questions about investment, make sure you leave it in a comment and I will make sure respond to your comments. Thank you very much. I will catch you on the next video. Take care.